Today's guest was interesting to me for a few reasons. He started his career out as a tech executive in Nvidia, Twilio, a few other unicorn startups, but he's also now a venture capitalist. He's transitioned over to venture capital. He's now investing in tech companies, particularly around AI. And one of the reasons I've interviewed people who have been in venture capital for 20, 30 years, and a lot of times they're so far removed from the basics sometimes, and they've been in it so long that they sometimes lose track of like the very basics that people try and understand, especially if you're a founder, you're a startup founder, you're trying to demystify in your head a little bit how an investor thinks. Talking to someone who's a new fund manager, I think my theory is demystifies it more than talking to someone with 20 years of experience who's just so, I guess the right word is maybe desensitized to it. So what we're going to do with my guest today is we're going to talk a little bit about Nvidia, the lessons from there. I've been studying Jensen Huang. He's built a $3 trillion company. We're going to talk a little about what he learned working there, some of the other experiences working for these, multi-billion dollar, helping Twilio get to $500 million as a company, all of those experiences. Then we'll talk about transitioning over to being an investor, thinking like an investor, etc. So without further ado, Devang, welcome to the Builders and Funders Show.
Excellent work, and thank you for having me on the show. We connected a couple of weeks ago, and it was fantastic to have a brief chat with you. I think we commiserated over the idea of storytelling and how important it is. So hopefully, you and I together can tell a few stories today.
Absolutely. Well, talking about stories, let's go to the very beginning of your career. You started out in NVIDIA, you're working on product. Tell me about that time. I know Jensen Huang, everyone's talking about him. He's gone viral. He's had a couple clips go super viral. Their market cap's at $3 trillion, I think, at this point. Tell me about that, what that experience was like.
Yeah, for sure. Yeah, I spent altogether almost a decade at NVIDIA, and I joined as an engineer at NVIDIA right out of school. The reality was that I wasn't a very good engineer, and I always was itching to get out of the lab, to get out of my desk and not be chained to writing code over the course of the weeks and the days and the months. So after a couple of years of slogging it out in engineering, I had the opportunity to move more towards product management, and I joined as one of the first product managers for CUDA, which was really an experiment at the time. And as Jensen likes to call it, it was exactly a $0 billion business that we were building. But really, I mean, our sights was on making this CUDA and its subsequent businesses into $1 billion businesses from day one. Um, just talking about Jensen for a little bit, I don't think that there's any change in the way that Jensen as a person is. I remember working closely with him while I was at Nvidia, but even when I see him today, with the $3 trillion market cap and kind of the revenue that Nvidia continues to bring quarter over quarter, I see the same fire, I see the same person and the same perspective, even if it's from far. So very privileged to have had that chance. And over the course of my decade there are a few anecdotes that we fun to share once we get deeper into it.
Yeah, the first thing I want to focus on is you mentioned Jensen. He is a founder, fascinates me. I was just listening to, I think it was Founders by David Senra. He did an episode on him for an hour and a half going into it. There was a story of how, like, he would, wherever he found you, he would grill you. Tell me about that experience. I know you mentioned you're working on this thing. It was, I think in the episode it mentioned with that particular project, you mentioned a lot of investors didn't believe in it or didn't want it to happen. And he really believed it. Like, what was that experience like working with him and seeing that intensity?
Yeah, and intensity, there is a lot of that. So talking about intensity, so in my course of a decade working at Nvidia, Jensen fired me 3 times, and these weren't literal firings; these were metaphorical firings. Firings to actually teach you a lesson, or for you to remember that there's course correction that's needed. Although I don't know what was the lesson in one of the firings where he fired me because I was wearing a jeans with slits and holes in it. So we all have our idiosyncrasies, but nonetheless, one of those lessons was about identifying a leading indicators of success. So, like I was saying, there's a philosophy at Nvidia, which is that we really go after markets that are not yet fully developed. And this is what we call $0 billion markets. Now I should call it $0 trillion markets. And I think if you look at Nvidia's history in the last 20 years, it's consistently delivered on that. Starting from being a gaming company or a GPU company, over time becoming a professional graphics leader, over time becoming the leader in parallel computing, and now taking parallel computing into multiple domains, whether it's crypto or whether it's AI, and soon robotics, and soon omniverse, and soon quantum. I mean these are literally, again, like we are seeing happen in front of us. These have the potential to become trillion-dollar businesses on their own. But one of the factors, after identifying what market you need to go into, one of the things that NVIDIA, and particularly Jensen, believes in early days is identifying leading indicators of success. So how do you know that what you're doing and what market you're focused on is actually the right place to be? And this is about discovering that things that we are doing today, are they going to turn out to be scalable and practical in the long run? And if so, what is the possibility? What are the chances of being able to get there with the pace of execution that we have? Another idea at Snorkel that's quite popular is this idea of executing at the speed of light, which is the fastest possible path that you can take to go from today to when that market is fully mature and materialized. And pairing these two concepts, which is discovering leading indicators of success, and then focusing yourself so relentlessly towards making these leading indicators of success meet the kind of the metrics that you've set up through speed of light execution, are some of the, I would say, practical and operational lessons that I've taken up with me. But at the end of the day, beyond sort of this fervor of focusing on a market that has not been yet developed, doing it in a very structured way. I do believe that when you step back from all of it, it's about playing the long game. I think NVIDIA has focused on that, not just as a company, but even as a team, even as individuals. And I think that's the biggest lesson that I've taken away from my time at NVIDIA, which is how do you truly play the long game? You cannot control the score in a game at all times, but you can control how you play the game. And if you control how you play the game, you eventually control the game itself. So if you are looking for that long-term vision, if you're not just thinking about, okay, was this quarter a good quarter or not? Was this week spent on the right thing? If you're looking at, in the grand scheme of things, when time is fully realized, are we going to win and come out on the positive side? That's the mindset that NVIDIA runs with, and that's the mindset that I've taken a little bit with me as I've built my career along the way too.
I want to go a little deeper into that because you mentioned throughout the history of the company, I think in the last 30 years that it's existed, it's gone through many pivots, starts making graphic chips for like games and PCs, and it's getting GPUs and all this. And lastly, it's focused on parallel computing. And sometimes it has to push back against investors when they say, no, you can't do this. They have to have that conviction. You mentioned one of the things that NVIDIA as a company and as the teams and people within it is good at is like identifying these frontiers, going into how do you actually do that? Because I'm sure now as an investor, that's still important for you to be working with founders like Jensen who have these convictions around these frontiers. How does that actually work practically? Like, what does identifying those look like? What does actually then think one of the things David Senra mentioned about Jensen is like he doesn't have these long-term plans, but he's just like, again, the strategy's evolving. He doesn't have like, he's a lot more flexible than most people are. Doesn't have these like 20, 50 step big 5 year plans, but more of like, it's just a lot more of evolution, just focusing on getting the big thing right and working on it on a day-to-day basis. Tell me more about like how you do that practically, how NVIDIA does it.
Yeah, the change at a bigger picture level is constantly in front of us, and it's about acting towards that change. When do you act towards that change? Is the part that separates early movers or first movers or even disruptors from people um, who follow through or who just become part of the change. When I look back at my career, and even now as I'm drawing more and more closer to venture investment, um, I don't think that I had this skill in early days, but over time, I think the more I have spend time exercising this skill, the more better I've become at viewing things and actually having conviction towards making those changes. So an example of this is, after a decade in NVIDIA, um, I decided that back in 2015, 2013, 2014, that the world of software was exploding and was a much bigger one. Now, NVIDIA is a much different company in the last decade, but even a decade ago, there were hints that NVIDIA was not necessarily just a hardware company, it was also a software company. But the way product development was taking place at NVIDIA, the way that discipline of starting with core technology, turning it, productizing it, and then commercializing it, was done in a very NVIDIA specific way. It was done in a very semiconductor ecosystem fashion. And me as an individual, I wanted to challenge myself. I wanted to learn that what does it mean to build pure software. I wanted to experience that. I was living in San Francisco. It was the best place in the world to be surrounded by people who are building software. So I had the chance to join Twilio. There was a pre-IPO. Had the chance to join one of the best companies that was building that still continues to build software and serve developers as their users. Having spent almost close to 5 years at Twilio, I was able to really soak in the idea of how do you ship product every day, not on a 2 year cadence, which is what typical semiconductor product shipment cycles are, but more so on an everyday basis. How do you really build product and refine it through these everyday shipments rather than understanding the market, building towards something that you believe the future is. So how do you stay more present with your product development was something that I learned very, very deeply at Twilio. And there's a different life cycle to building software in general. So for me, that change was a very valuable change. A lot of people ask me that, do you regret leaving at NVIDIA when you did? And I don't, because at the end of the day, I have so much more learning by doing something different, taking what I learned at NVIDIA and then applying it into a different context. So very similar to CUDA, one of the things that I did at Twilio was help build a layer of products and software and business on top of Twilio's API. So Twilio has core business of communication APIs, whether it's for making phone calls through its voice API or sending messages through SMS or WhatsApp APIs. But on top of that, we discovered that customers were building solutions using these basic APIs as building blocks. And over time, at Twilio, we decided to create a business by launching new products that were easily composable apps along similar solution areas. For example, contact center or two-factor authentication or just-in-time communications. So that business on its own grew to be about $500 million. And again, very similar to CUDA, to me, that was the start of the $0 billion business at Twilio, learning from NVIDIA applied in a different context. And then from there, I've taken, again, similar idea that 2020, heyday of Twilio, heyday of COVID, I certainly felt like I needed to, again, put myself in a different environment where I could enhance my learning. And what was looming around the corner, my thesis was that developers have been very successful with these right kind of software tools, and they've really helped businesses, small and large, to become some of them to become disruptors like Uber, Airbnb, or Lyft, and some of the other companies to become really generationally exceptional companies like Shopify or Nike and others by using the true power of software. But if data science teams are given similar tools, uh, it's quite likely that data science will be the next team that will drive the business forward. And I took that bet and I joined a seed stage company called Snorkel AI that was focused on building a platform for data scientists to develop data to build better models. And fast forward last 4 years, we've seen that data science and machine learning and AI has really taken on a different trajectory. But certainly I did not predict everything that has happened with AI, but I did have a inkling that there is a future where data becomes a lot more critical, and with the right kind of tools, whether it's models or whether it's simple models or whether it's large models like generative AI, LLMs, that data is now being unlocked into many meaningful ways. So coming back to my earlier point that I think the changes around us, a lot of people see the changes. It's about, do you have the conviction to act on that change? And if you act on that change and you stick far enough with that change, it's very likely that you'll catch on to a new trend.
You mentioned there were a few pivots in your career that you made after identifying these big trends. We talked a little bit about how you did that, but I want to go a little deeper for someone who's maybe younger, or they're kind of looking at what to do next and they want to identify these trends. They want to work on the next big thing. Bezos at the story of how he was reading this newspaper and like he sees that internet's growing at this, can't remember the exact rate, but it was like 4,500% or something of that nature, just this insane rate. He's like, wait a minute, this stuff, it might be, this stuff might be the next big thing, next big frontier. Maybe I should be doing stuff. And he leaves his big finance job and leaves that behind to go build the internet. Now he's a multi-billionaire. But what were the signs that you were looking at that made you go, I got to join a company like Twilio, got to help these guys? What were those indicators? And if you have like specific anecdotes of moments, I think that'd be very helpful for someone who's in that stage of their life where that it might help them identify that frontier for themselves.
Yeah. Let's take a more recent example, right? So DeepSeek was released, what, 2 weeks ago now, and certainly it's taken market by a huge storm. Um, and still there's quite a lot of questions around what does DeepSeek really mean, right? So if you were to break down, on one end you can say, okay, maybe um, the the world as it looks with AI is clearly on a different trajectory now after DeepSeek, where models don't need to be trained with very expensive infrastructure. That could be one deduction. The other deduction can be that DeepSeek is just an evolutionary step based on all the work that has happened prior to DeepSeek, and we should expect more of DeepSeek type of models to come out. And as an ecosystem, this is a great development, because if you can make this technology cheaper and cheaper, that means that proliferation of this technology continues. And we know that we're just starting with AI, with the application of generative AI. There's at least 10 to 15 other domains where generative AI can have a huge impact, and we can talk about it a little bit deeper as well. But coming back to my point is that there are a few ways that you can deduce a event that has taken place in front of you. Um, I think stepping back and trying to discover that what is the real value that DeepSeek is offering into the market right now. So, irrespective of whether it's making OpenAI less competitive, or the value for Nvidia's stock go down, the other value is that there is enough interest from the market where people are trying and experimenting with DeepSeek, and they're comparing it to existing methods to say, is this a better one? So the tremendous amount of change that has been in adoption of DeepSeek is a leading indicator of success, to say that as technology becomes more cheaper, more people are going to adopt that technology. So applying a similar concept to a different domain where you see a change in trajectory and evaluating it with what does this mean in my context, can be a good way of making that decision. For me, just coming back to Twilio, that change was um, that API-based technologies in general were on the rise, and it wasn't necessarily just driven by Twilio. There were other companies like Stripe, and in general, the use of cloud computing was growing. So I think that kind of gave me a sense that this could be a good way of creating applications in areas where previously none had existed. Similarly, with Snorkel, um, the use of data isn't necessarily a new thing in AI, but the true change is that how do you make data that is inaccessible more accessible, unstructured more structured? And there are many ways to go about it. One is manually developing this data, like companies like Scale and Labelbox and others have done, or you can do it in a programmatic way. And I believe in the long run, developing these programmatic approaches are going to be more valuable rather than applying human labor to structure the data. So I think it's a matter of discovering where that step change possibility exists, and then applying your time into it. Not everything was going to pan out, but if it does pan out, it can pan out in a big way.
Interesting. It kind of, you could boil it down to just pay attention. Like, keep your eyes open. Look at, if you're on Twitter or on the news and you're looking at this stuff, try and discern the trends and see where things are going. And if you can zoom out a little bit and sit down, maybe, like, I don't know, meditate on it or something. You can see where things are headed and take those bets. And they may, like you said, they may not always turn out. But am I getting my takeaway
I
right
would say,
there?
I mean, if I were to summarize it, I would say in a nutshell, it's go one layer deeper than what you see on the surface, right? Because, like I said, with again, just coming back to DeepSeek because it's a very recent one and very interesting take. There are a couple of different ways to deduce what's happening with DeepSeek, but once you go a level deeper and you start seeing what are users really doing with this model, how are people really adopting this new technology, that's when you can start to determine that is this here to stay or is it only a splash in the pan, is it a non-event. So you may come up with different opinions. Now what you deduce is certainly based on your perspective, but at least you are going into the next decision with a thesis rather than going into the next decision um, just based on popular knowledge.
Fascinating. And then we spent quite a bit of time talking about your tech career. I want to shift over to
Yeah,
investing now a little bit. I had another gentleman who was a lot like you, came from an engineering product background. And one of the fascinating things that he was telling me about was how that experience in engineering, it gave him such an advantage because he could understand when someone came in and pitched him some LLM company and they're talking about building these models and doing this and doing that. He was able to understand it more than most other investors who come from a finance or business background do. I want to ask you about that. Tell me about the transition to becoming now a venture capitalist, investing in these tech companies, but also how that product background maybe gives you a bit of an unfair advantage in evaluating these companies and what you maybe specifically with your background with Nvidia, Twilio, et cetera, look at when you're evaluating companies' products specifically or its market as well, the market opportunity.
yeah, for sure. So for me, the way I look at it, again, for me, there's this moment of transition that is taking place, which is AI is not just a technology shift; it's a business shift or a business model shift in many ways. And you can see that with the way AI products are being sold, the way AI companies, AI startups are being built. They're truly running a different playbook compared to the cloud playbook, or even compared to companies or the internet playbook that came before that. So um, for me, when I saw that change, and I have a lot of friends who've seen a change similarly, their pathway was to dig in and start their own startups. Some of them are doing really well as well. My draw was that I really enjoy the 0 to 1 phase, and how can I apply myself in the 0 to 1 phase across many different opportunities, and that has drawn me closer and closer to a career in venture. Uh, Again, given that I've now exercised the skill of being a little bit more thesis driven in making career moves, my thesis into investment, and of course, it's no surprise that primarily my focus areas are investing into early stage AI companies. Even within that, the way I see investments in AI, it's not very straightforward. It's not very easy, even for people who understand the tech, or even for people who have been in the venture space for a long time. The reason is that there is a lot of, as they call, entropy in the system or chaos in the system. What used to be hot even 6 months ago, nobody talks about it anymore. Things happen in a week's worth of time that completely shift the market in a different direction. So as an investor, it's really hard to call and say, yes, this is the bet that is going to, that I have a high conviction into. Now, of course, venture investors or any investor does not have a magic wall to see into the future, but we all make decisions based on where we have conviction into what can become a big thing. So for me, the way I see a few patterns emerging, one is there's a significant amount of concentration that's continuing for AI talent in San Francisco or Bay Area at large. And that's happening along first 3 or 4 layers of the AI stack. It's infrastructure, it's models, it's tools, it's data. But largely, San Francisco and Bay Area ecosystem has done a really good job and will continue to do a good job to serve the AI developers. So platform of AI, the AI stack, will continue to build out of San Francisco. Um, but on top of that, the AI application space, I do believe that the value creation that happens with AI can happen anywhere around the world. We may be sitting right now having this conversation while a $1 trillion company is being born somewhere maybe in India, or maybe somewhere in Europe, or in Africa even. And the reason is that, if you think about a similar analogy with electricity, there are a few companies that generated electricity in early days, or worked on the infrastructure for electricity, but the whole economy benefited from electricity. And today, the world's largest companies are not, PG&E, or any electricity companies. It's other companies that have benefited from the fact that they have this electricity available to them. And I think AI is going to have a similar concept, that it's not just people who are building AI and inventing AI that are going to benefit from it, but how AI is going to be applied is going to lead into the next phase of step change in our economy too. So when I look at sort of where, as an early stage investor, I see value, like I said, platform is certainly concentrated in the Bay Area. But I see that Europe has made a lot of investments into deep tech through research institutes. There is a culture of grants. There is an environment and ecosystem of supporting deep science based technologies. And the challenge with deep science based technologies is it's really hard for venture to invest into these type of startups, or these type of projects, because they have a very long horizon, typically not ones that fit into venture scale business. Typically, funds are anywhere between 7 and 10 years long, and these companies certainly take much longer to mature. Although all companies are taking longer to mature, but certainly deep science companies are certainly in a longer horizon. It requires a lot more investment, and it's a lot more of a riskier bet, because they are working on fundamental science rather than just working on commercialization, which happens much later on. However, AI can have a pretty interesting change into deep tech, as it's called, or deep tech startups, as it's called. So, if you have an AI native mindset, and you are applying that AI native mindset to a deep tech domain, there's a possibility that commercial productization and commercialization of whatever you're building as a deep tech startup, whether it's biopharma, whether it's robotics, whether it's energy, that productization can happen much faster, and potentially at a much lower cost of development too. So I'm quite bullish on that change taking place. I was recently in Switzerland, visiting with some research institutes in Switzerland. ETH, for example, is one of the largest institutes out of Europe, but particularly in Switzerland. And there was a phenomenal set of startups who are, really trying to take a crack at this idea of, can AI accelerate deep tech research, and can it accelerate deep tech commercialization and productization? The second part is that 2025, we all already believe that this is going to be the year of agents. We all see a lot of fervor and a lot of excitement about applying AI for agentic work. Um, Another way that I think about agentic work is there's a lot of agents are not only replacing SaaS software, but it's really replacing services, human services. So a lot of those front office services, whether it's sales based, or marketing based, or customer service based roles, those type of agentic solutions and companies are being built out of the US, I should say. But there's a lot of back office processes that are also being adopted or changed through agentic technology. And I feel like India serves as a really good place where there's deep domain expertise from last couple of decades of BPO work, where back office operations are much more um, ripe for new startups to take on as agentic workflows. So if you think about accounting, if you think about legal, if you think about back office processing, those are the kind of things that I would expect that a lot of companies out of India could build out. And there's also a bigger ecosystem level change that's happening in India in terms of investment, in terms of how founders are thinking about not necessarily building companies that are services oriented, but actually building companies that are building products. And the venture ecosystem is actually supporting that with early stage and even growth stage investments in India.
Hmm. I want to. One of my favorite questions to ask investors about their investments. We talked about deep tech. We talked about AI agents. What specific companies have you recently made investments into that really excite you, and maybe even why? What stood out to you about them? Because one of the other things that I want to get your take on is, you've kind of seen tech develop over time, and with we saw this like the dot-com bubble where there were a lot of companies taking a crack at, hey, how do we use this like internet stuff to like I don't know, it could build things, and they a lot of them tried, and a lot of them lost millions and millions of dollars. So I want to ask you, like, one, how are you? What are the investments you're making now? And then second is, how are you filtering them? And maybe like, are there any lessons that you're taking from the dot-com bubble to make sure that, because with AI it's hot, and I've interviewed a lot of investors who are very excited
Yeah.
about it, but also everyone acknowledges that there's also going to be maybe a bit of a bubble, and they also acknowledge it might be the next .com thing. So I'd also love to get your take on that.
Yeah, for sure. So my journey into venture is more recent, but I'll talk to you about a few investments that I've made in the last, I would say, year or so. So one of the companies, just talking about this intersection between deep tech, AI, and India, all three different themes put together. Um, there's a company out of India that has built a vertically integrated EV infrastructure. And if you think about EV or electric vehicles, they are truly productizing some of these deep tech technologies that were developed, I want to say, in the last couple of decades. So this particular company is called Billion Electric. They're the second largest provider for EV infrastructure that in India, and they're expanding out of India, particularly in US and South Asian markets. Where they have a real advantage is they've taken some of the core technologies for energy generation, whether it's related to solar or green hydrogen. They're generating their own electricity. They have put together these quite efficient charging systems, but particularly they have brought in innovation on charging systems with a different business model. So rather than selling charging station technology, they are leasing the charging stations out, or they're offering charging as a service. So that's a change that they brought into the local market. And then on top of that, they're leasing EV vehicles. They're not building EV vehicles. They're buying EV vehicles from partners, and they're leasing them out to larger companies, specifically focused on mid-mile delivery. So that's a point about, again, a business model and business focus. Mid-mile delivery is what you do from port to warehouse, or from warehouse to warehouse, rather than the last mile, which is from retail to consumer, or warehouse to consumers, warehouse to retail. So that's where the proposition for EV really strikes up, because if you imagine the miles that are being driven for EV vehicles in a mid mile are somewhere between 100 to 300 on a trip, and that's a very friendly mileage space for large EV vehicles. So there's a great product market fit from that standpoint. And I'm excited for their journey to not only kind of build this three layers of the EV infrastructure stack, but on top of that, add analytics, driver health, safety, delivery analytics, and delivery notifications. And then on top of that, they're starting to build a new team that's focused on autonomy, as we've seen, success with Waymo and others in a different context. I do believe that, again, similarly, mid-mile delivery is very ripe for autonomous driving, as well as routes are pretty deterministic. And there's a lot of information available about those routes in a predictable way, just because the vehicles have traversed them over the course of several days, several weeks, several months, to create the right kind of autonomous software for it. So that's one example that's kind of tying these themes together. Just talking about AI platforms, I've invested in a company called Nixla. It's a phenomenal team, still very early, but they built a foundation model, kind of like GPT-4, but specifically for time series forecasting. So when you think about large language models, they generate text. In this case, Nixla has a model, one of the world's first foundation model for time series forecasting, where you give it a historical time series, whether it's a stock chart or a weather chart or IoT sensor data, over a course of time, and it generates and predicts what the future time series could look like. And this is a pretty typical enterprise use case. And the way that they've built this foundation model is for developers to use this and apply it into many different domains. They're about 20 to 30% higher in accuracy compared to Profit, which is an open source collection of models in this space. And yeah, I mean, like I said, San Francisco continues to be the place where platform and developer tools are continuing to grow. Also excited about a couple of other investments. One of them is Glean, so talking about agents and talking about generative AI in an enterprise context. I think Arvind and team have done a phenomenal job in building Glean out as just like Slack. I think Glean is very quickly going to become the go-to enterprise tool for or SaaS tool for work. Um, Very bullish on code generation. So have done a few investments on code generation startups as well here in the Bay Area. But yeah, all in all, these are a few things that make me excited, and I'm looking forward to continuing to look for similar type of entry points into the market.
One of the things you mentioned was San Francisco and kind of bridging it with and you mentioned India as a frontier that you're really excited about. I want to ask you, there are a lot of people who look at SF, and I've heard different takes. People say you should be surrounded by the ambitious people. You got to go to a place like SF if you're getting into this tech, and then others who say, well, if you're in a place like India and a city like Bangalore or wherever, you actually have an advantage. Your dollars go further. The talent's much significantly cheaper. You've got all these set of advantages, and you're also not a part of the hive mind. You get to maybe see certain opportunities that others don't because they're all in these same echo chambers. The last thing I want to ask you about is if you're a founder today and you see the opportunity in deep tech, or you see the opportunity with AI agents, you're thinking, I want to build a company here. Just looking at it, do you, like you mentioned Europe? There's a culture there, and that enables these deep tech projects to exist. There's a lot of research going on. Where would you position yourself, or do you think location matters as much today? Could you be anywhere in the world and build some that's, say, a multi-billion-dollar company doing AI agents, or work focused on deep tech, or do you still think it'd be a wise decision to consider moving to a place like the Bay Area?
Yeah, I believe that if you are building sort of the bottom end of the AI stack, possibly being in the Bay Area is an advantage, probably an unfair advantage in many ways too. So if you're building infrastructure, whether it's semiconductor based technology for AI to serve AI, or you're building models, or you're building tools and data oriented startups, Bay Area does offer a very unique ecosystem, and there's a lot of experience and talent that has directly worked on some of these technologies or have worked on very similar technologies that are now directly applicable in this new context. There's also this virtuous circle where the feedback from the market is very quick. So Bay Area developers are much more open to adopting newer technologies. I was talking to a founder recently, and I was asking him that, how does he evaluate who he wants on his team? He's a very small team. He's a team of 5 people, and he's thinking about adding a sixth person. But this is a very judicious add of a sixth person. And I was trying to understand that what is the criteria of selecting the right person, because it's going to increase the team size by 16%. So it's a pretty significant addition at this stage. Um, he offered me a good sort of a pointer that today, what in this context, what's important is that a team member is able to work with autonomy and is extremely curious about new technologies, because largely in the Bay Area, most developers are no longer writing with a blinking blank cursor. They are starting with some auto-generated code and then taking on from there and stitching it together. So that's just one example that, just as developers, every person in an organization has to be curious about what can I do with a newer tool, with a newer way of working. So that's kind of the Bay Area mindset. That said, from an application standpoint, domain expertise matters a lot. And domain expertise is partially a function of research, but it's partially a function of understanding your customers deeply. So I would say that it's either related to kind of where your domain experts are. If you have a research orientation, probably being in that research cohort makes more sense, or research location makes more sense. But if it's related to, it's not research oriented, it's oriented based on commercialization, then you would want to be very close to where your customers are, where the most concentration of customers are.
Ah, I see. And I wanted to, I know I said that was the last question, but I do want to ask you one more thing. When we had our early call, you mentioned something that Mike Maples Jr. had taught you about investing when you had got into venture capital. Now, Mike Maples Jr. is, for those that don't know, he's, a bit of a legend. He's invested in Twitter, Twitch, Clover Health, et cetera, a bunch of these massive companies. I want to ask you about that before we end it off.
Yeah, yeah, most definitely. So I recently um, um, I had a chance to meet with Mike in a workshop session, and he talked quite a bit about his idea about that venture is about investing into contrarian bets, being able to look at patterns and being able to say that who are the people who are breaking these patterns, and being able to do that early enough. But there was another thing that he mentioned, which is very relevant for someone like myself who's early into venture and is starting this new career. He mentioned that unlike baseball, venture is a world where you don't have a strikeout. You can take as many chances and wait to swing the bat rather than having a three strikeout rule. So if the ball doesn't look right, you can wait a little bit until a different ball comes your way, and if you believe that that's a better ball to hit, then you take your swing then. But at the end of the day, you have few swings, so you better take the right swings rather than trying to hit every ball that's coming your way. Because if you don't hit it, there's no penalty for doing that.